They're joining now. Hello, everyone. How are you? Thank you for joining. We will wait a few minutes until everyone joins to give the registrants some time to get in. So we'll start in exactly 2 minutes. Welcome, everyone. Thank you for your attendance, and thank you for being with us in this first of its kind webinar. We really appreciate the time you're allocating to be present with us here. I'm Ghayath Sioufi. I'm the founder of CapG Ventures and the Conciliary Company. And it's been 1 year now that I'm working very closely with a lot of partners to bring the fractional model to the region. We are here in the partnership of Synergy, the BPO outsource boutique, and with the support of the Fractional Leadership Alliance, with the global support of the Fractional Leadership Alliance, represented by Mr. Hanning. Together, we will be talking with you about the fractional model, the full outsource model of all the layers of the work between the C-level and between the operation level. And we will be highlighting why this model is now needed in the region and why it's flourishing. As you are aware, also, there are many circumstances that happened in the past few months in the region which made this model more and more lucrative for many businesses, especially on the SME front. We will be sharing, the three of us, a quick walkthrough about what is the fractional model, why the outsource model in general is becoming more lucrative when it comes to the actual C-level outsource or the operational outsource. And then we will also be discussing a little bit your questions, your concerns, and attending to those questions. There is a window of Q&A where you can put all your questions, and we will be checking this window throughout the actual webinar. And then towards the end, we will be asking these questions on your behalf. You will be automatically muted throughout this webinar. This is a little bit essential for the housekeeping to ensure that the focus is with the speakers. So thank you for appreciation, for understanding for this one. I'm going to start sharing my screen now, and I'm going to give the floor to Henning to start the first part of the webinar. Henning, the floor is yours.
Thank you, Gayat. My name is Henning Schwino. I'm the Executive Director of the Fractional Leadership Alliance. We are a newly formed industry association for the fractional industry with members from all around the world. I want to start this webinar by sort of pulling us up to 30,000 feet, because before we look at what this model means inside the UAE, it helps to see where it sits in the world. And here's the headline I would ask you to leave with. What you're about to hear today is not a local experiment. It's not that. It's the UAE stepping onto a curve that the most developed leadership markets have been climbing for several years now. And it's a structural shift in how companies buy leadership. And in 2026, the momentum in this region is to catch the wave. Let me give you evidence for that in 4 quick highlights. The first one is the trajectory. Fractional leadership feels new, but its roots go back 50 years. Interim management began in the Netherlands in the 1970s and then spread across the UK and the rest of Europe. What's new, so, isn't the idea, it's the scale and the speed. The global market for fractional executives has now passed $5.7 billion and is growing around 14% every year. North America is more than 4 billion of the 5.7, and by one estimate, close to 60% of all fractional executives in the world work there today. But the number that should really catch your attention is the UK. British fractional roles have grown 340% since 2019. And 78% of UK scale-up companies have either used a fractional executive or are actively considering one. So this isn't a Silicon Valley curiosity. It has gone mainstream across the world's most mature markets. The second highlight that I want to point out is, what does a mature fractional market actually look like? There are 3 signals. The first one is adoption. So the adoption is moving from startups into mainstream. Gartner projects that by 2027, more than 30% of mid-sized enterprises in the US will have at least one fractional executive on retainer. That's a threshold, 30%, where something stops being a trend and it becomes structural. The second one is, it looks like finance is going first. The fractional CFO is the most mature category. 25% of all fractional executives in the US are CFOs, closely followed by marketing, revenue, and technology. Companies bring in fractional leadership where the cost of getting it wrong is the highest. The third signal is about governance, because the governance is catching up. The supply side is professionalizing. In a Heidrick and Struggles 2026 survey, 85% of interim and fractional leaders indicated that they've been working independently for more than 1 year. And one of our member companies, Vendax, did a survey of fractional executives recently, and 54% had more than 3 years of fractional experience. That means it's a profession. It's not a stopgap between jobs. The third highlight is, and this matters most for the UAE, why is this happening everywhere and at once? Because the drivers are structural, not regional. Senior talent is expensive and scarce everywhere. Companies need speed everywhere. They need optionality, the ability to scale leadership up and down as priorities shift everywhere. And they need access to expertise they could never justify hiring full-time everywhere. Those forces, cost, speed, optionality, access, don't care which market you're in. They're as true in Dubai as there are in London and New York, which is exactly why a model that took hold here is taking hold over there. And the intent is settled across markets. 72% of CEOs say they plan to expand their use of fractional leadership over the next year. The fourth and last highlight, where does the UAE sit on that curve? Honestly, probably a few years behind the US and the UK, but moving faster than either one of them did. And I would argue that this year, 2026, is an inflection point. You have a generation of growth stage and mid-market companies scaling under real pressure. Capital is disciplined, hiring cycles are long, and a single wrong senior hire can cost 6 to 12 months of runway. You have Vision 2030 in Abu Dhabi and D33 in Dubai, pulling enormous ambition forward on a really tight schedule. And that's exactly the soil fractional leadership grows in. The UAE isn't behind, it's arriving at the curve at the perfect moment with a chance to adopt the mature version of this model rather than learn it the slow way. So the one thing I'd ask you to hold on to is this is a global shift, and the UAE is not experimenting. You're catching a wave the world's most developed markets are already riding, and you're catching it at the right time. What that looks like on the ground, the operating reality, that's exactly what Gayat and Mohammed are taking us. That's where they are taking us next. So, Mohammed, over to you.
Thank you, Henning. It was a great entry point, let's say, to the discussion. And I have to say that all what you have said, even from a business process outsourcing perspective, stands quite exactly the same. So to go back to the idea of business process outsourcing, so this comes as the perfect continuation of the fractional business or the fractional C-level appointments, in the sense that it's the head, but the head cannot function without arms. And this is where the business process outsourcing comes in as an enabler for businesses to grow and to survive in the current economic context. Having said that, the UAE is experiencing very interesting state. So between 2025, 2024, we've seen a GDP growth of 6.2%. We will see what will 2026 look like. Obviously, we have lots of geopolitical context there. The GDP is close to 1.9 trillion in 2025, and the non-oil economy is actually growing at a quite a steady state. It has been valued at around 6.8% for 2025. Now, having said that, scaling, especially for mid-sized organizations and even bigger-sized organizations, large-sized organization, will continue to be an extremely important, context to take into consideration. So you have all sorts of disruptions happening, technological, talent shortage, again, the macroeconomic level in between, the geopolitical risk to be taken into consideration. So the fact that we have all this on the table, the previous model where an organization would come and actually simply hire a full C-suite organization is quite changing. And as Henning said, this model is not new. Internationally, is quite known in the US, North America in general, but also more and more in Europe. And the UAE is heading quite fast into that direction. And there are a lot of reasons that actually justify this. Structurally, the old model is actually broken. Fractional leadership plus a BPO and outsourcing level execution brings a lot of value to any organization. From a cost perspective, obviously, we are transitioning from a pure employee-employee relationship, which comes with a lot of benefits, perks, total cost to company that has to be taken into consideration, to a more flexible model with no permanent burden to be established. And to be honest, lots of companies are quite interested with this model right now. I don't think we've ever seen such an interest. I don't think we have seen such an interest in BPO and fractional business in this part of the world the way we have seen it in the past few months, in the past few years, more or less. From a strategic perspective, so the C-level fractional talent augmented with BPO capabilities will bring a lot of value in terms of strategic shifts, ability to deploy quickly, ability to steer directions because of the expertise that you bring, than a typical traditional C-level management that would be in place in terms of direct hiring. Okay, so to go back maybe a bit to the BPO element here, obviously we look at things like cost pressures, digitalization, which is creating more and more need of specialized resources, the expertise gaps, which comes in, as a matter of fact, in two situations, either when companies are scaling or entering new market, or whenever they face a substantial challenge that they need to deal with. And that's basically when they come and use a BPO. Again, the focus becomes all shifted around speed of execution, about the expertise, and about cost. So these three elements are actually the main drivers to this change that we're seeing on the market. And I would add even to this, there is another element which a lot of companies, some of them actually reach out to us asking for this combination of services, is because they want to cut on the internal politics, in the sense that a lot of companies, they like to have an external party that comes in, embedded with their teams, without having to deal with some of the collateral damage between brackets that might come in terms of internal politics, because a C-level fractional person or a BPO team has one point of focus, which is delivery, and SLA. So this actually is highly appreciated by lots of organizations right now. What could go under this combination, this package? There are multiple areas, because basically any organization can outsource anything except their core business. And that's the beauty and the difficulty of the BPO business overall. So this is typically, as Henning said, that's your accounting. HR is another area which is growing in demand. Procurement, a very strategic element, but companies are relying more and more on outsourcing of this function. Technology and AI, and finally, marketing is another element where organizations today are looking for experts to come in, to jump in, and actually lead this function on their behalf. There are other areas that we could eventually add, like legal, like facility management, and potentially this can go to many other areas. Okay, so brought together in an integrated model, in a combo, I would say, fractional level, the tech-enabled BPO is an extremely strong tool for any organization to grow and to actually create value for shareholders. And that's actually where organizations are heading now. And you will be surprised to know that it's not only, like Henning said, the mid-segment market that's actually asking for this kind of services, but more and more we're seeing on the market very large-scale organizations opting for this combination because, and if you go back to the reasons behind, they're seeing value and they're seeing that this is exactly the future where they want to head. And on this, actually, Reyes, please, if you can take it forward on the Fractional C-level model.
Thank you, Muhammad. Thank you, Henning. Thank you, everyone, for being present again. So Henning gave us a bit of a top-line status of all the fractional model that's happening globally and how we can benefit from it in the region here. Muhammad talked a little bit about the support that the fractional needs when it comes to the full BPO model, because at the end of the day, it's insource the leadership, outsource the execution. This is exactly what we're talking about. I'm going to focus a little bit about insourcing the leadership and the fraction level as is, highlighting the key benefits of the fraction level, highlighting what are the differentiations between the fraction level and the traditional consultancy level, and we will see that quickly in the slides. I just want to have a quick disclaimer that when we talk about the consultant, with all due respect, our friends, our colleagues are all consultants. We are not undermining what they do. We're just highlighting the differences between the fractional model, which is about leadership and execution, versus a traditional consultancy model on that perspective. That said, as it was mentioned before, the landscape required a lot of agility, a lot of experienced leadership, C-level people that carry the full business acumen of the companies, that can talk the business language of the company, top line, bottom line, EBITDA, and all the other related matters of that can immediately blend in the execution level, the executive committees, and start operating. A lot of numbers are there from different sources showing how this industry or how this specific model is gaining more and more traction from that perspective, and how a lot of C-level people and founders, co-founders, owners, even private equities and venture capitals are finding it more and more lucrative because of the elements that we will see in the coming slides. In general, we are here to bridge a critical gap that a lot of companies are facing. Currently, we're talking about SMEs, but as we move forward, the big corporations will also be on board quickly in that model. We're talking about a cost-effective excellence. Again, bringing a C-level talent on a fractional role cuts a lot on the cost compared to an actual headcount. Because when you have a headcount, you have the salary and other expenses related to that headcount. And the cost, as Henning said, the cost of this headcount leaving is huge when it comes to that perspective. Accelerated impact, the fractional C-level team can immediately be on ground up and running. And they can show immediate results within the 6 to 9 months of engagement. And this is because of the nature of the operation that they do. the structures and the tools and the methodologies that we all carry. KPI aligned accountability. We have the KPIs, and most importantly, we have the OKRs, which is the objective and key results now. And this is part of the, if you want, a way of measure the results of how the fractions operate. Last but not least, the flexibility, whether it is vertical or horizontal, across industries, across functions, supported by a big network of partners. BPOs are partners. You have other freelancers, partners in different aspects of businesses that are not covered by the core BPO offerings. So all of these will enable the business to move fast, get quick solutions, and run accordingly. A quick and top-line comparison, and again, this table, as I said in the beginning, is not meant to undermine the work that the staffing agencies or the traditional consultants are doing, but on the contrary, it's only the only objective is to highlight why the fractional model is very lucrative on that perspective. Starting with the strategic depth, whereby the fractional model is very premium on that. The implementation focus, it's extensive. The executive experience is exceptional because you're talking about C-level people who were encountered with all the C-level management of the companies. The cultural integration, when we embed a C-level executive in a company on a fractional base, one of the key factors is the chemistry between this person and the company's executive team. It's not only about the learning, the technical learning. It's not only about the passive experience in a certain sector or in a certain practice. It's also about the actual integration and cultural integration. The C-level fractionals come with a high level of emotional intelligence that will allow them to quickly blend inside the organization. Regional knowledge. A lot of our colleagues have worked in different practices across the MENA region, whether in the UAE or in other countries, and this will help them immediately be boots on ground and not wait to learn about the markets or about the other unknown factors. And most importantly, the cost structure, which is flexible, value aligned. It helped the company move quickly without investing heavily on a C-level talent versus a permanent C-level talent per se. The amount or the different verticals that the fractional business covers in the region here currently are mainly CMOs, CFOs, CHROs, CIOs, Chief Commercial Officers, Chief Operations Officer, and lately the CTO, which is turning into Chief AI Officers. As Henning rightly said, the biggest lucrative and immediate need is for the CFOs, and we've noticed that a lot in our quest. However, the CMO, the CAIO, and the Chief Commercial Officer are rising, and there's more and more, if you want, demand on that specific on these specific roles. In a nutshell, speed of onboarding. It's immediately in weeks, not in quarters, and sometimes even in dates. Most of you are operating in the UAE, and you know how it is a hassle to do the administrative work in terms of getting a visa, the end of service, all the details to be able to work and be immediately on board. This is sorted out. There are no visa needed. These are external partners that will sign a contract via a company and then will be immediately operational. Multi-client perspectives, most of them have various multi-industry perspective. And here, for example, if you have a fractional CMO who is very experienced in the B2B business, any business that falls under the B2B can be managed by this fractional CMO. Of course, it will take a little bit of an extra time to learn about the specific industry, but that's the easiest part when you know the B2B dynamics, when you know the target groups, when you know the different consumers' behaviors. Regional network from day one. Regional, I would say regional and global network. As you can see, we have with us the executive director of Fractional Leadership Alliance, which is a global organization growing in all the continents and in all the countries. We have a big regional network of support across all the countries, between the MENA and even with Turkey and North Africa. I think we have someone, a very good friend from Turkey here on the call also, that is developing a similar model there. All of these factors together offer agility, cost effectiveness, wide range of expertise, and immediate action to deploy on ground. If you get, and Henning mentioned that at the beginning, if you get a wrong senior hire as a full headcount, it will cost you around 6 to 12 months of runway. And the cost will be multiplied by different axes in case this person didn't appear to be a fit and left after a short while. We don't do that. We have a sprint and a marathon models. We identify the scope, we identify the exploration phase, and then immediately we're up and running. In a nutshell, it's about leadership and execution. We fine-tune the strategy, the business strategy, the marketing strategy, you name it, with the owners. If it's not there, we build it with the owners. And then immediately we help them implement the strategy. And this is the key difference between our model and the traditional consultancy model, who is not involved in the actual execution. Now, when I say execution, it doesn't mean that in many areas we execute ourselves as fractional model. This is where either the in-house team executes, or we get outsourced model like the BPO, like the freelancers, and like other support system to do the actual day-to-day execution. But we supervise this execution. We own this execution vis-a-vis the internal stakeholders of the company. To recap, fractional C-level direction, decisions, accountability, BPO execution, capability, speed, and compliance. One engagement, one accountable lead, one set of KPIs. A head without arms cannot work. Arms without head cannot work. And what we're presenting here is a fully integrated model that will immediately help the clients, the SMEs, and the bigger companies to shift their practices. In a nutshell, to wrap it up, right leader, right priority, and right stage. We're happy to design the model for you for the next stage of growth. And definitely allow me to say that this webinar is the first one of a series of webinars where we're gonna focus on many areas that we discussed here in a nutshell. But we're gonna have a lot of webinars and a lot of panels, whether online or on ground, to discuss more and more the model and to give it its fair share of exposure. I will refer to what Henning was saying in terms that UAE is the biggest potential now to nurture and grow this model quickly and effectively. And I think within the directions that are happening from the government moving downwards to all the private and public sectors, this is going to flourish moving forward in Q3 and Q4 and onwards. I'm going to stop sharing, and we will be welcoming all your questions in the Q&A window that you can see. Please feel free to share all the questions. We don't have any questions yet, but really we're very open to do that. We thank you for your attendance, and we really appreciate that. So I'm gonna stay here for 3-4 minutes, all of us, to allow you to put any kind of questions in the Q&A window. My AirPods kept on falling, that's why. So we have a question from Amr Abbas. Has there been any traction on the fractional front in Saudi? Allow me to answer on that front, Amr. Yes, actually, it is there. The discussion is starting, especially with the current situation that's happening between the Saudi entities, big companies and government, and the traditional consultancy models. This is opening and paving the way for the fractional model to come in heavily on there. It's still at the very early stages. UAE is a bit more advanced on that front yet, but we foresee that the Saudi discussion or the Saudi topic and the fractional topic in Saudi will be really on fire as of Q4. Thank you, Amr, for this very valid question. Other questions, ladies and gentlemen?
I just want to add to your point, Riyas, regarding Saudi. The local experience in Saudi is extremely important. So whether on a fractional basis or full-time hire, the local in-country experience, let's say, is quite demanded from what we could see usually.
Agree. And this is one of the key areas that we provide. We have another question from Sami. How do you scale fractional service CFO, considering the service will be focused on the CFO as a person himself? Henning, do you like to share with us the practice from the US on that element, and we will all learn from it?
Well, I think that the model is universal. There are several forms of scaling when a company brings in a fractional CFO. It can initially be that they simply don't need the strategic financial leadership on a full-time basis. They bring somebody in when they are at a few $1 million of revenue, but would like a monthly strategic review of their financials, or they bring a fractional CFO in when they're getting ready to fundraise and they need to prepare their financial systems for auditing by an investor. And then as companies grow, of course, a fractional CFO needs sort of the support structure of an accountants, of bookkeepers, of a controller possibly. And those are functions that can either be brought in as third parties through a BPO, or they can be hired and become full-time staff. Now, the exit scenario for a fractional CFO, like for any fractional function, is that a fractional replaces themselves with a full-time executive. So a company has grown, the need has surpassed the capability of a fractional executive. Now it's time to bring in a full-time, and when the fractional executive then supports the business owner in finding the right full-time C-suite executive to come over and to come in and take over.
Thank you, Henning. Sami, I hope this answered your question. If not, please type your comments again on that. A question from Kamlesh. Is there any demand for fractional chief investment officers, treasury heads in bank, insurance companies, etc.? So, Henning, if you don't mind telling us the situation on that front in the US, and then I will answer about the region here.
Yeah. So most of the banks and insurance companies are larger organizations. And that means that there is less of an opportunity for a fractional to come in. In the US, most fractional executives work in organizations between 1 and 50 million in revenue. And when you go beyond that, and most banks and insurance companies are that way, then fractional might not be the right model. The question to ask when looking at an executive function is always, how much of that strategic leadership skill set do we need? And I would argue that in the scenario that you're outlining here, Kamlesh, that it is likely not necessarily something for a fractional executive.
Thank you, Henning. Yeah, I would have answered exactly the same when it comes to the actual size of the company and the nature of the role. We can say that on the short and midterm, this is not happening. Now, on the long term, if certain dynamics might change later on across these big biggest organization like the banks and the big insurance companies, then the discussion might happen. But in the short and midterm, we don't see that there is a big potential on that front currently, even in the region here. And they are not low-hanging fruit when it comes to the fractional business development effort and if you want, the prime prospects where the fractionals will go and try to catch or see opportunities to help companies and operate.
I would like to add one point here, Rayas. I have seen it, but it was only, I think, a couple of times, and it was in an interim mode. So an organization, a boutique investment firm, or maybe special projects where they needed a chief investment officer, but it was an interim before hiring a full-time dedicated C-suite resource.
Exactly. Thank you, guys. The next question is from Amr. Again, what would be the role that you and your team will offer? We can discuss that, Amr. So basically, it's a collaborative effort to get leads from the clients. So let me take one step back and explain the current situation now. In terms of talent supply of fractionals, this is now on the good level. We have a lot of talents in the region here that are increasing, whether individuals or through companies. The big work that's being done now and the big, if you want, effort is being put on the demand side, which is the client side, which is the small and medium enterprises, and try to open and pave the way, first of all, by educating them about the fractional model, and second, by presenting the right opportunities for them. And this is where we can all collaborate and help each other to get the opportunities and the support, actually, to ensure that whoever is onboarding a fractional role in any company has all the back end support that he or she needs to excel in that thing. Sula, you have a question. How can the client ensures confidentiality and governance are in place when hiring a fractional CXO? Well, actually, that's a very important question, and that was part of the DNA of everything that we're building. It's contractual. At the end of the day, it's part of the contract that's being signed between the actual fractional executive and the company itself. So it's a very clear clause in the contract. And second, it's about the actual practice of it's about the actual person who is being delegated to do the work. Like I said before, the fractional C-level person is not only someone who has accumulated technical knowledge. When we profile and when we work with our colleagues on that front, we see the personality, we see the actual business acumen in terms of aptitude, in terms of ethics. And this is very important for us because it's a two sides of the coin. So you have the actual contractual part, but then again, you have the character, you have the background. And when you combine these two together, you can definitely guarantee that the actual confidentiality is very well preserved. That's the answer from my part. Please, Henning globally and Muhammad locally, if you can also elaborate.
Actually,
Well, the one point, go ahead, Mom.
Sorry. So it does not, I mean, it's not different from hiring any other internal resources. Whatever internal procedures, policies apply for internal resources will apply to the fractional C-level. It's not a rogue resource moving around the organization or using the systems of the organization. But obviously, it has to be documented in the contracts and the engagement, even in the SLAs that are put in place. By the way, this works equally for the BPO business as well.
And I would add one more aspect to this because it ties back to the sort of the character and the reliability of a fractional executive. Most or all fractional executives are very dependent on their reputation to find their next gig. And they're constantly in the market for new gigs, unlike full-time employees who, when they're off the market, are not engaging with other employers. And when they're reliant on their reputation, they can't possibly afford that there's any doubt about their character. And word spreads very fast if there was even a shadow of a doubt that they were not behaving correctly, if they were not protecting the confidentiality of their existing clients. And all fractional executives I work with, I know that they would work away from a job if there was even a doubt of any conflict of interest, for example.
That's a very, very valid and important point, Henning. What we carry with us as fractional people is the knowledge, the attitude, and the reputation. And this is one of the important assets that opens the door for us. We have a question from Carol. Do you see the emergence and need of fractional HRBPs or CHRO in the region? If so, in which industries and company size? In terms of CHRO, yes, we've seen that. I personally have seen that, saw that in many companies. The company size is, we're talking about medium companies, not startups per se. Why? Because the startups, for a very simple reason, the startups are sometimes too small, even to carry the weight of a fraction leader. But when they start getting the seed A and seed B and all the funding, this is when the doors will open for the fraction. When it comes to the CHRO, we've seen that. I personally have saw that in the, for example, in the advertising agencies industry, a lot of mid-sized agencies are getting fractional CHRO that is helping them work on growing their team in terms of growth, comp and ben, a lot of other stuff. But there is an appetite now, especially after the crisis that happened in the past 2-3 months for that. We can have a discussion also separately, and we can highlight more industries that are lucrative to this area. Muhammad, Henning, do you want to?
I think it needs a bit of sophistication. So in the sense that usually you will see the need for a fractional CHRO in more sophisticated industries where, for instance, culture is important, performance management is important, where finding talent, managing talent is extremely important, is extremely complex, you know. And this, by the way, could be a mid-sized organization or even a smaller organization. It doesn't necessarily need to be big organization. Whereas the need for more HR BPO, you will see it where the focus will be more on operations, will be more in organizations where you have a big turnaround of activities and more complexity in terms of headcount versus sophistication of the organization. So this is the main differentiator, I would say.
There is, for every fractional function, there is this window of opportunity. When does it make sense to bring somebody in, and when does it no longer make sense to have this function fractionally? And I agree with Gayat, who said earlier that a fractional CHRO is not something for a startup. You have to have some staff in place before it makes sense to have a CHRO or otherwise HR leader function. So maybe the opening of the window is at a $5 or $10 million revenue threshold, but it can go on all the way to 30 or 40 million until the company then needs a full-time CHRO.
Definitely. Carol, I hope we answered you. If you have any more questions on that matter, please feel free to shoot them out. Amr, how long is the length of an average engagement? Well, listen, usually we have to be realistic. There's some time needed to be able to achieve something. Usually, from my humble experience in the past year or so, 6 months is the average engagement that can at least start yielding some results, some tangible results for the client to see. 3 months is too short. between the time you do the exploration phase and between the time that you start putting the actual building blocks for the execution, the 3 months will be over. Sometimes if it's just an advisory role, 3 months can work, but to be fully involved as a fractional C-level, I think the average unit is a 6-month unit. That's from my humble experience, but please, Henning from the States, it might be a little bit different, and you might want to shed more light on that.
Well, one of our member companies, Vendax, they did a survey, and across about 1,000 different fractional assignments, the mathematical average was 9.6 months. So 9.5 months, 10 months. And that falls well into that 6 to 12 month window that you also mentioned, Gaia. So there's data and statistics out there to answer that question.
Perfect. Thank you very much. Raj, you have a very interesting question. The benefits of fractional leadership are clear, yet market adoption in the UAE remains relatively early. What is the biggest barrier, and what proven approaches from the US and the UK could help overcome it? I'll answer the first part, and I'll kindly ask Henning to input on the second part. So when it comes to the first part, if you look at the scene 1 year ago, when I started actually doing some buzz on the fractional model in around April 2025, I was like an alien. The world was new. No one knew what I'm talking about. Even some people mistook it to the fractional laser, the hair removal. But anyway, because I was working in the medical aesthetics industry. But that said, now if you go to the LinkedIn, for example, you find a large conversation happening on the fractional model and the engagement. So the awareness and the momentum is increasing. The talent number is okay and is increasing. The current focus now that we're doing through this webinar, through our visits, through our push, through our outreach networks, etc., is to create the demand, to start generating the demand. And to be able to do that, we need to educate the owners of the SMEs about the fractional model itself. Most importantly, about the difference between the fractional model and the consultancy, because the first thing that they will tell you, and I've heard that a lot, oh, we don't want another consultant. But when you start to explain that the execution is there, supervising the execution, leading the execution is there, this is where the whole conversation changes. With what happened in the UAE in the past 3 months, and with the economic challenges that are there, between the layoffs, between the shrinkage of the budgets, this will present or increase the appetite of these company owners to go to the outsource model in all the aspects of the outsource model. And this is where the fractionals can jump on that and really highlight their roles. So yes, I agree with you. There's still a lot of work that needs to be done on the maturity of the business from a demand perspective, but the continuity and the intensity that we're working on with a lot of partners there in the market is gradually making us close to crack this specific bottleneck. Now, on the second part of the question, I'll kindly ask Henning to input.
Yeah, absolutely. The situation, Gayat, that you described for yourself a year ago was the situation that I was in 7 years ago, in a marketplace that had never heard of the model. In every conversation, I had to explain what it actually means to be a fractional executive. And now, 7 years later, that's no longer the case. The model has been accepted and is well known. It's more about how, for a business owner, how can I apply this within my own company? The way to get there is through a lot of communication, through a lot of trust building measures. And it's really hard for an individual company or an individual executive to be doing that. And that's really where an industry association comes in, because an association like the Fractional Leadership Alliance has the ability to talk to other multipliers. So to talk to other industry associations, for example, that's something that we're doing in the US. or the ability to talk to government agencies. That is something that's happening in Singapore, for example, where we're talking to government entities about how to promote, how to incorporate the fractional model. And another way would be to talk to go into more mainstream media outlets. And that's something that's happening more and more in the UK, for example, where companies in the fractional space aren't just going into social media to promote their message, but they're actually connecting with more traditional business media outlets and getting the story and getting the highlights on fractional executives published. So there are a lot of things that companies and that associations can do to advance, to promote, to make the model better known. And the end game is that in a playbook that a CEO has, the fractional model sits right next to a full-time hire, to bringing in consultants, to bringing in or outsourcing services with the help of a BPO. All of these need to be part of a playbook that the CEO has at their disposal when they are facing problems and have to make decisions on how to address them.
Great. I hope, Raj, we were able to answer you on your question. Again, if you have any other comment, please feel free to share. We still have one question, again from Sula, which is there a certain ideal level of maturity for the company to adopt the fractional model? Listen, I think we tapped on this, but to sum it up, yes, there should be a maturity and the size of the company to be able to adapt that size when it comes to the team that is there, and when it comes to the billing, to be able to pay to the fractional. Maturity, we're talking about startups that already cross the A and B tours, and then we have the actual medium enterprises, whether they are traditional or they are new ones. So yes, there is a certain maturity, but most importantly also there is a certain type of company owners that needs to be open to discuss that model. A very traditional company owners, and we have a lot in the region here, as you know, might not be open or see the benefits of that. Whereas the different generations that are coming after for example, the grandfather who owned the SMEs or who launched the SMEs would be more and more open to that. So from my perspective, this is it. But I think Muhammad and Hani can also add some value on this answer.
I think the organization needs to have some sophistication, some maturity, like you rightly said. That's one side. The other side is probably, and I think Carol mentioned this, typical industries where we could see a fractional position. So this is probably your healthcare sector, your tech sector, your new digital economy, let's say. This is typically where I would see this versus less presence in more traditional organizations, the construction, the heavy industries probably. Though it's changing, but probably the concentration now is more on those small, agile, the new economy, more or less.
If I might, sorry, go ahead, Hani.
I would define maturity sort of in three different factors. One is the maturity of the owner, the CEO of the company, and that's more about the mindset. They need to be open to it. They need to understand it. They need to approach it in the right way, and know how a fractional executive, for example, is different from a consultant. The second is this window of opportunity that I used earlier, where for a CHRO, it sets in a little later because the company has to have a certain number of employees to justify a CHRO. Likewise, for a CFO, there needs to be a certain volume of financial transactions for a CFO to actually be worthwhile. But there could be organizations very early on, startups that are in need of a sales leader or a marketing leader, and they can bring that talent in on a fractional basis. So that window opens up a lot sooner. The third definition of maturity is something that Mohammed hinted to, that different industries have different maturities and different adoption rates of for a fractional executive. If we look at the tech sector in the US, for example, adoptions are between 60 and 70%. So 60 or 70% of all tech companies in the US have or have had a fractional executive. In the traditional manufacturing industrial segments, that number is about 10% right now. And it's a matter of the maturity in the adoption of the model. And ultimately, the more traditional industries will catch up, and we'll see an equal level of adoption across all industries. But it just takes more time because tech companies tend to be quicker to embrace novelty models like the fractional executive.
Excellent. Thank you very much, Henning. These are, I think, all the questions. Any other questions, ladies and gentlemen, that you guys want to ask? On all cases, please, even after the webinar, feel free to reach out to us, and we will happily continue the discussions, because this is the purpose of the session. It's to kick off the collaborations and the discussions. And the more the discussions are, the more the ripple effect will be in the market on that front. Also, if you guys need the recording of the webinar, please reach out to me, and I will gladly send it to you via WeTransfer. I think we've reached 1 hour, which is the cap of the session. I want to thank Henning, Muhammad, and Subhi for being present there, for your valuable input and contribution, really. Henning, I thank you for the support, the global support for us in terms of nurturing and growing this model here in the region. I'm sure that in the coming months, FLA and us will be working and doing more and more initiatives in the region here to grow the business. Muhammad, thank you for the continuous support from a synergy perspective. You are the arms of the brains. So definitely your support in making things happen is one of a kind. I'll give you just the floor, Muhammad and Henning, if you want to say a closing statement before we end the session.
Well, I would want to thank you, Gayat, for setting this up. I was proud and happy to be a participant here. And if there are questions about global developments, please feel free to reach out to me on LinkedIn.
Perfect. Muhammad?
Thank you, Ayaz. Thank you, Henning, everyone. It was a great pleasure, and looking forward to more and more engagements in the near future. Thank you.
Great. Thank you all. Thank you very much. See you soon in another session, and meanwhile, take care.
Thank you.
Bye-bye. Ciao.